Good evening, everybody. I'm going to divide my presentation into three parts. And the first part is looking at what kind of world we might expect when we're through the coronavirus. So let's begin by just looking at the course of the virus itself. So this slide shows four scenarios for the death toll from the coronavirus. So the top line represents the laissez-faire line. What would have happened if the government had done nothing of any significance to contain the virus? No lockdown in March. And you can see the virus would have just continued to rip through the population. And we would have had about 400,000 deaths, more or less most of them by now, actually. So this is the UK. UK death toll would have been 400,000 if we had done nothing at all. The orange line is what would have happened if we'd had a soft lockdown, and the grey line is what would happen with a hard lockdown. And the thick black line is the actual data based on the Financial Times estimates, which are a bit higher than the government's own estimates for the cumulative death toll. You can see that the black line is actually tracking pretty close to the hard lockdown line. And that hard lockdown line, if we stick to it, would lead to a death toll, an ultimate death toll of around 70,000. So that's terrible, but it's an awful lot better than 400,000. So just to say, if we do anything reckless, if we were to have a reckless unlock at the end of May, then what you can see is that dotted grey line would rise up again, and we could still see 400,000 deaths if we were reckless. But let's assume that doesn't happen. Let's assume we do, as a country, manage the virus well and we avoid a second spike. What would that mean for the economy? Here we can see the solid red line is the estimates from the Office for Budget Responsibility, and what you can see very clearly there is they're expecting, or indeed starting to see, an enormous plunge in economic activity in Q2, but quite a bounce back in Q3 and Q4. And the dotted red line is not their estimates, it's just what would happen after that if we had ongoing growth at 4%. So you can see that's actually not quite getting us back to where we were, and the grey line is the data for comparison from the global financial crisis. So you can see it's quite a grim picture. Now, is that actually what's going to happen? Well, the truth is nobody knows, not even roughly, because we don't know what the policies are going to be. So if you imagine, if we had a committed market fundamentalist like Jacob Rees-Mogg setting policy, then at the end of this year, we will have a no-deal Brexit, which, according to the government's own estimates, would be very damaging to the economy. And then after that, we would have savage cuts to public spending, and that might produce a profile rather like the bottom end of this grey area. On the other hand, if we had a leader like Franklin D. Roosevelt or Clement Attlee in charge of policy, we would expect some kind of New Deal. So there'd be much greater support both business and for people, and that might produce a profile shaped a bit more like the top of the grey area. So the US New Deal that Franklin D. Roosevelt introduced saw enormous public investment programs and job creation schemes, which is what ended the Great Depression. In the UK, after the Second World War, Clement Attlee's government followed the blueprint of the Beveridge report and invested heavily to build the NHS and to construct the welfare state. And in both cases, the results were better for the overall economy, the overall growth of the economy, and far better for the typical member of society. So on the face of it, that looks like a no-brainer. Why don't we just, without even thinking about it, go for the New Deal approach? Well, the obvious question is, what would happen to the debt? And so here's the data from the Bank of England about the last 300 years of history. The very last bit actually comes from, again, from the Office of Budget Responsibility, which is their predictions for the outturn for this year. So you can see they think that debt will reach about 100% of GDP by the end of this year, which is something we haven't seen since the turn of the millennium. Well, is that a problem? Well, there are already a lot of voices telling us that that would be ruinous and that we need, if we were going to be responsible, we need to have another round of austerity. But that's really not what the rest of the data are showing. You don't normally get to see 300 years when people show you these charts of debt. They normally show you the last 20 years, and it's a very different picture. What you can see is that 100% is not staggeringly high in historical context. It's not even rather high, actually. It is just pretty well average. It's very close to being the average debt that the UK has had for the last 300 years. So really, 100% debt to GDP is not a worry. There's no factual basis for this debt hysteria. But even if it did go a long way above, I think it's quite possible it will go a bit above 100%. But it still would be no reason for hysteria. It still would not justify the hysteria. And as the slide says, the debt hysteria itself, I think, could be much more dangerous than the debt. If you look back at 1820, that was just before the Industrial Revolution really took off. Debt to GDP was over 200%. If you look at 1945, it was over 250%. But the Industrial Revolution and the golden age of capitalism that followed the war were the two most successful periods in our economic history. And they followed very, very high levels of growth. So demonstrably, high debt is not an obstacle to growth. And of course, the growth itself quite quickly reduces the rate of debt to GDP. So I think we will hear an enormous amount of noise about ruinous levels of debt and the need for responsibility and the need to get it under control and the need to cut spending and so on. Almost all of that will come from journalists and politicians, and hardly any of it will come from serious economists. And if you look at this chart, you can see why it won't be coming from the serious economists. So actually, we have a choice. You saw on the previous chart, there was a big difference between the bottom of the profile and the top of the profile, the world of austerity or the New Deal style world. What does that really mean for people? Well, this next slide shows today's median earner taking home very roughly £24,000 a year. And if you say, well, what will that be by the year 2050? Well, the answer is it all depends on which trends we follow. If we were to follow the pre-2010 for growth in median wage, then what we would see is that that 25,000 would have risen to about 35,000. At the other end of the spectrum, if we were to follow the coronavirus with a no-deal Brexit and then permanent austerity, we'd be looking at something much more like 16,000. So in the first case, the average person, the median wage earner, would have a far more comfortable life than today. Still not luxurious, but much, much more comfortable. They'd be about 50% better off. In the second case, most people will be living in or fairly near to today's poverty line. Of course, the poverty line would be reduced, so we wouldn't call them poverty, but they would be very near or in poverty by today's level. So what would that look like? Well, that would look a bit like the UK having turned itself into a country like South Africa, which is currently the most unequal society in the world. You have a small number of immensely wealthy people living surrounded by intense security and protected from the impoverished masses. So what we've seen is that that's a choice, not an inevitability. We can choose either of those two destinations. So why don't we choose no mass impoverishment, no environmental degradation, lower inequality, a constructive role for everyone? In short, why don't we choose a positive future for our children? So after the break, we'll come back to the question of how we can create such a future.